Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
Well, overnight on Wall Street, the S&P hit a new all-time high. The Dow Jones fell, though, by 0.25%. What's the story in the global markets?
Okay, well, as you just mentioned, the Dow has been falling a little bit, but S&P and NASDAQ has been doing very well. And S&P actually hit an all-time high on Tuesday. So even though the economic news, if you look at it objectively, has not been that good this week. So again, there seems to be a disconnect between the real economy and the stock market, not only in the United States, but globally as well. But let's take a look at the United States in more detail. The biggest reason people say that there is a disconnect between the real economy and the stock market is continuing low interest rate by the Fed and the high liquidity driven by the very expansionary monetary policy. Because of this, there's a bit of a perverse case going on here because the continuing bad news in the economy makes the Fed maintain the low interest rate, and that is one of the reasons why the stock market is doing so well. Another reason is that earnings and performance of companies have been down substantially compared to last year, but they're doing better than what the analysts expected. So they're not as bad as the analysts predicted. So because of those two reasons, people seem to be optimistic about stocks, even though the underlying news on the stocks are perhaps not as good. Now, one exception to this is the tech stocks. Tech firms are genuinely doing well, partially because of the shutdown. People working from home, people not being able to go out, so entertaining themselves through the internet. That has really increased the value of these tech companies. S&P is rated by the market value of firms, and the three major tech companies that are in the S&P, Apple, Microsoft, and Amazon, has been driving the increase in the S&P stock index. Amazon is up about 80% this year. Apple is up almost 60%. Microsoft has risen by more than 34%. If you took these three companies out from S&P, the return on owning S&P 500 stocks, including dividends, is said to be about minus 4.1%. But if you add these three companies back in, the actual return is 2.4%. So these tech companies are doing a lot to drive up the S&P market, in addition to the low interest rate and high liquidity mentioned earlier. European markets are not doing very well this week because of the China-U.S. conflict. Asian market, Shanghai and Hang Seng are doing fairly well this week. It rose on Monday and Tuesday, but their market isn't closed today, but it's falling today so far. Japan Nikkei has been falling this week. That's probably the aftermath of their very low second quarter growth rate announcement, minus 7.9% quarter to quarter. For Korea, I'm sorry to say that we had a major drop-off yesterday that continued from a slight drop that we had last Friday. But both markets did gain today a little bit. Kospi rose by 0.52%, Kosdaq by 2.31%. Obviously, the biggest contributor to the dropping stock market in Korea is the higher infection rate for coronavirus in the Seoul metropolitan area and the renewed stronger distancing measures. But the U.S.-China trade war seems to be doing its part as well. The trade war seems to be getting worse, not better. And then, of course, the global environment where everything is unsure is also making the markets quiver quite a bit, not only in Korea, but throughout the rest of the world.
Yeah, staying here in Korea, and speaking of trade, exports last month we see were down compared to a year earlier by 7.1%. That's a smaller decline than it had been in the 3 months prior to July. Tell us about that and what stands out to you in this figure.
Okay, well, customs and the government side paints an optimistic picture because, well, as you just mentioned, the rate of decline has been falling. In April and May, the decline was higher than 20%. In June, it was 10.8%, but July, it's only 7.1% negative. But if you look at the last year's numbers, the last year's numbers from June to November were not very good either. For example, June last year fell by 13.8% compared to June 2018. July last year fell by 11.1% compared to July 2018. So in a sense, we're starting from a lower base because the last July was a very bad year for exports as well. But still, I think we should take hope wherever we can get it. And the hope in these July statistics is that semiconductors exports rose by 5.5%. Shipbuilding rose by 18.8%. And I think shipbuilding is really an optimistic figure because, well, why build more ships? Because they expect more trade, more volume of transport in the future. So people are betting that this crisis will be over eventually and we'll have a recovery in trade, and that's why you need more ships. So the increase in shipbuilding order, I think, has a significance beyond just how it feeds into Korea's exports. But I'm sorry to say that the other major export items, such as auto, petrochemicals, wireless communications equipment, did not do well. In terms of regions, China and U.S. rose because, well, China is recovering from the coronavirus. United States, they had a bit of a surprise growth in June and July, but other regions such as Vietnam, EU, and Japan, exports by Korea fell. And it's a big question on whether the U.S. exports to the U.S. will continue to rise because, well, they still haven't been able to control their coronavirus. And imports by Korea fell by 11.6%. That's usually a sign, if you have such a large negative decline in imports, that there is a domestic recession, and that seems to be continuing.
Well, speaking of the virus, it's spreading again in the Seoul area. There has been hopes for a V-shaped recovery to happen in the third quarter this year, but some say that's in jeopardy now. We're almost out of time, but what do you think, Professor?
Okay, well, previously, because U.S. and China was recovering, the hopes for V-shaped recovery was, I thought it would depend on the United States. If the United States got on a growth path by controlling the coronavirus, Korea had a decent chance of making a V-shaped recovery. But now Korea, as well as other countries, they're seeing increases in coronavirus. And if Korea goes into a strengthened distancing and other countries go back into a limited lockdown and shutdown as well, then Korea is hit on both domestic and export fronts, and that's going to make a V-shaped recovery pretty much impossible. Of course, this is too early to measure yet. Korea may get lucky. We may just have to use strengthened distancing measures for 2 weeks. U.S. may actually go back to the growth path. But for now, the V-shaped recovery seems a lot harder than it did 2 weeks ago.
For sure. We're all hoping for the best, though, Professor. Thanks so much for coming on today. We appreciate it.
Thank you.